Hello, this is Brian Rezny, President of Rezny Wealth Management. I'm bringing you an important update about the economy and the investment market so you can understand what we see in the global landscape. Well, it's official. Yesterday, the U.S. markets, many of the indices, actually hit new record highs. Again, because of improving economic situations within the U.S. ADP report came out strong, but generally speaking, we're seeing improvements in the U.S. economy. The U.S. economy and the equity markets in general have been ranked relatively strong by our proprietary system, and we continue to own the majority of our client assets within the small and mid cap within the U.S. We continue to avoid short-term, intermediate, and long-term bond and bond mutual funds for one simple reason. Rates are slowly moving up. I've repeatedly warned non-investors of our firm that if you own bonds, it's time to make changes to your portfolio. I'm glad to say that clients at Rezny Wealth Management have not been hurt at all this year by owning the wrong type of fixed income because we are primarily in floating rate securities. These are the ultimate asset protection in a rising interest rate environment because floating rate securities typically have about a 90-day duration or less. So what's nice about that is not only can we participate on the upside of interest rates, but we do not participate on the downside from the valuation decrease as rates move up. So again, bond investors, mutual fund investors, if you have anything that is really probably more than a one-year maturity, your total return is going to be hurt this year and in the future if the economy continues to improve and interest rates go up. I'm sad, a sad situation came about in our office this week. We had a potential new client that came in and interviewed our firm, and this is the stuff we see all the time. The couple was working with a brokerage firm and basically was sold exactly the wrong kind of investments. Long-dated, intermediate-dated municipal bonds, corporate bonds, and long-dated preferreds. I've repeatedly warned investors, please reduce the exposure of your long-dated and intermediate-term preferreds, bond, and bond mutual funds because this is exactly the wrong place you want to be. Also, what was sad about this situation is this couple was sold these bonds at such absorbently high prices, they really have no chance to make any money, and the chance of loss in their portfolio is substantial. This is the kind of bad investment advice I always warn and repeatedly warn investors that listen to my TV show and radio show, and that's the exact reason why people hire our firm every single week and every month is because we're a fee-only money manager. We work in a 100% fiduciary capacity. We're not a brokerage firm. We don't sell you and overcharge you for the value of what a bond should have been sold for, but unfortunately this couple, that's exactly what happened to them. The problem with too many investors is they don't understand truly what suitability is and what fiduciary is, and they don't understand that most of these brokerage firms, bank and insurance companies actually do not manage your money and actually can work against you and your money and cost you a lot of your retirement nest egg. So make sure, if you're an investor and you're not working with a fee-only investment advisory firm, make sure you do your due diligence and utilize our fiduciary versus suitability questionnaire. The economy, again, is getting better in the U.S. We're impressed by that. We've been on the right side of the fence throughout this year. We continue to want to overweight small and mid-cap throughout this year in the U.S. marketplace. Of course, our positions, as our clients know at Rezny Wealth Management, can change at any time. Risk management is going to be extremely important in the years ahead. One of the things I do want to bring up is this. This has been the slowest recovery that we've seen coming out of any recession probably in the last 40 or 50 years. It's actually a plus because the economy has grown slower coming out of this recession. We have a potential that this expansion in the U.S. could last multiple years longer than a typical expansion coming out of recession. Again, this could be a potential positive and give a little bit more stability to the growth of the U.S. economy, and investors who are in the right allocation within the right asset categories, I feel can greatly benefit. Of course, if you're a client of Rezny Wealth Management, please give us a call if you have any questions. If you're not a client of our firm, maybe it's time you became a client. Call our office for a consultation. There is a difference, and we invite you to experience it. Make sure you listen to my live TV show next Wednesday. By the way, we had a show yesterday. It's already been uploaded on our website. You can also listen to my live radio show this Sunday from 10 a.m. to noon Eastern. Make sure you have yourself a safe and profitable week.